Okay, everybody, and welcome back. As I mentioned, we went on break late because we're taking our time covering some of the technicals on the market. I didn't want to come back too late. People think we missed the whole show. So let's move this out of the way. And we'll go on and finish these last two articles, and then we'll get started directly on the technicals and the bias chart. As I mentioned, it's a relatively quiet session. We'll take a look at upcoming reports today, and I think the only data we have is going to be Canadian data. You can see that it's going to be the Canadian wholesale trade, and then we don't have anything here. Now, rolling into the next day, we'll see Australian housing home price index. Obviously, that's the same evening for U.S.-based traders, but they'll be rolling into the next day in Australian trade. Moving further on, for tomorrow, we do have a UK CPI and PPI. Those come in at 5:30 Eastern. We do have the New Zealand dairy auctions for those that are going to be trading the kiwi. U.S. current account. We have Canadian retail sales tomorrow. Not really any major U.S. data at all. And then tomorrow after the close, we have the API oil stocks. So gold hit a two-week high on Monday as the dollar slumped to a near six-week lows after the U.S. Federal Reserve's dovish outlook on the pace of rate increases this year continued to disappoint dollar bulls. Spot gold rose 0.5% to $1234.60 per ounce after early touching $1235.50 an ounce at its highest since March the 6th. U.S. gold futures gained for April gained at 1234.10. The dollar index, which measures the greenback against a basket of currencies, was slowed down 0.3% at par 0.04 after hitting a low of par 02. It's worse since February the 7th. Gold prices have rebounded more than $35 from its lows before the policy decision to boost rates last Wednesday, while the dollar has fallen 1.7% from its high at 101.71 the same day. Fed Chair Janet Yellen's cautious guidance last week has investors pricing in almost no chance of another rate rise at the NOx policy meeting in May, and seeing rising to around 50-50 for June via FedWatch. Now, you know, our talk here was, I thought, that what we were going to basically going to be is that it was going to be two and done, which was December and then March, and then done till, I don't know what the next one beyond that is. I don't know if it's August or September. I don't really look out that far. I don't see the point of doing that. It certainly didn't help all those other people who were saying we're going to have 4 rate hikes. So what the heck am I going to be looking at, worrying about whether it's August or September? I know there's one in there somewhere, but like I said, for all those people who are coming for 4, and I'm sure they knew every date and this time and that time, didn't do them a doggone bit of good. So that's what I'm saying. So I'm just, my whole thought was it was going to be two and done. That's the way the Fed moves. And despite everybody's thought that it was going to be so hawkish, I simply didn't see it. I don't know what those people were looking at, if they know how the Fed has, gone about things, and Janet Yellen's pace, as I said, a cautious pace. There was no reason to think they were going to flip the script and do a 180 and then go, full on hawkishness. Made no sense. I'm not sure what those people were actually looking at. So anyway, it says here, the market was geared for a hawkish FOMC and the Fed was really dovish. There was a lot of short covering. People now are putting gold back on the plate and more comfortable. A Hong Kong-based precious metals trader said, the dollar is weak across the board. It's pushing gold higher, a pure technical buying. Spot gold fell in the week to March 14th on firm expectations that the Fed would hike rates as the dollar strengthened, but prices reversed, prompting traders to cover their short positions. Money managers slashed their net long positions in gold by 44,058 8 lots to 49,835 lots during that week, the lowest since early January. Managed short positions rose by as many as 10,000 lots to 70,454. With concerns of a more hawkish Fed now easing, the outlook for gold looks a little bit more positive, ANZ analyst said in a note. Markets are also having a look ahead for a packed week of Fed messaging with no less than 9 different policymakers set to speak, including Chair Janet Yellen on Thursday. Spot gold is expected to test a resistance to 12.37 per ounce, a break which would take the lead again to 12.43, Reuters technical analyst Wang Tao said. Holdings of Spider Gold, the world's largest gold-backed exchange, fell 0.35% to 834.10 tons on Friday. We already covered the ECB story. And then lastly, take a look at crude. Like I said, it's a relatively slow day, not anything happening. Euro's been trading in about a 7-tick range for about the last 2 hours almost. Oil prices fell on Monday with already bloated market pressures by rising U.S. drilling activity and steady supplies from OPEC countries despite touted production cuts. Let's see, as of 8 GMT, prices for benchmark Brent crude futures were down 34 cents at, or 0.66% at 51.42 per barrel. U.S. West Texas Intermediate crude futures slipped 48 cents or 98 to 48.30. Traders said the prices are coming under pressure from rising U.S. drilling and ongoing high supplies by the Organization of Petroleum Exporting Countries, despite its pledge to cut output by almost 1.8 million barrels per day with some other producers like Russia. There is good, strong momentum to the downside, futures broker CMC Markets said in a note on Monday. U.S. drilling added 14 oil rigs in the week to March 17, bringing that total count up to 631, the most since September 2015. Energy services from Baker Hughes on Friday extended a recovery that is expected to boost shale production by the most in 6 months. Sukhpreet Vijakar of energy consultancy Trifecta said the rising activity was reinforcing expectations of higher U.S. production, offsetting supply cuts. U.S. oil production has risen to over 9.1 million barrels per day, but from below 8.5 in June. Reacting to the ongoing glut in markets, financial oil traders cut their net long U.S. crude futures and options positions in the week to March 14th, the third consecutive reduction, the U.S. Commodity Futures Trading Commission said on Friday. The unwinding of positions is both a cause and reflection of the big fall in crude prices when the cracks in the OPEC, non-OPEC deal emerged, when it seemed like it became evident shale oil is back and the new swing player, said Greg McKenna, a chief market strategist and brokerage AXA trader. Defying rising sentiment that oil markets remain oversupplied, some analysts say markets will tighten soon, arguing that the OPEC-led cuts will only start to bite from April, just as demand picks up as refiners return from current maintenance outages. The cuts in OPEC production for the start of 2017 should start to show up between mid-March now and mid-April. Over the coming weeks, we expect a sharp reduction in imports and increase in refining runs, which will lead to impressive crude inventory draws. Analysts at AB Bernstein said on Monday in a note to clients, a combination of falling imports and stronger crude runs should lead to substantial inventory cuts over the coming months, they said. So we'll move into the technicals. I'll move into the charts with the buys chart. Let's get there. Okay, so here we are on March the 20th, and got the euro dollar. We mentioned earlier, as for those that may have just come on now, is one of the things that we start to do now is in the first half hour, actually first 10 minutes, actually went a little bit longer this time, we actually focus on the technicals. We come in the morning, and we go into what's happened overnight. And today we spent a little bit more extra time, even though it's relatively slow session. Obviously, we took a look at the euro quickly, the cable. Took a look at the dollar yen. You know that on the show we were looking for a move down on Friday. It had some people talking about trying to come into the 1280s, and I said, "Hey, look, we're probably going to make it down to this 1255, maybe down to 1251." We had a nice confluence there. You saw the bonds they're strengthening, which obviously gave a boost to the dollar yen. We took a look at gold and how that's been stacking up. Obviously, we took a look at the bonds, even took a look at the euro on the 30-minute chart. Spent a little bit extra time, like I said, the first 10 minutes at least, maybe a little bit beyond that. We'll cover the overnight technicals. Not only is it if any key levels are being hit, but also the impact from any interrelations, which we were seeing. We gave evidence of that with the bond market compared to the dollar yen, and also to the gold market, which opened as the bond market started to open, break lower. We saw a quick $1.50 move lower in the gold at that time. So we're going to move into the euro, which we had here. Now, those that were following in the morning when we came on, we talked about the significance of the 762 on the daily close. So we're going to get on to this. Right now, we had our support at 715 and 705, and resistance at 815. So when we look at the euro at this point, 792, we made a run towards that area, but we fell a little bit short. I think it was on Friday, I believe it was, and we backed off. And we thought, hey, that's, because we had to watch out, for those Friday flows. But we thought the first trip towards there is probably going to get a pushback. We'll see what happens after that. We saw the euro come under a little bit more pressure. There was a lot of shorts that were had taken on the euro a little bit too soon on that Thursday. And that we talked about the 724 area to 730 area being a good place for shorts to go in and cover, which would also provide anybody that was on the wrong side of the market, they would want to go in and cover and take minor losses before the weekend, or would like to take minor losses, or break evens at that point. That actually turned out to be the low on Friday, and before we saw a little bit of a ramp up. As the stories go, we covered the news this morning. The dollar's been under pressure, basically, with the communique that came out of the G20. So it opens up some pressure, but as I mentioned, we've come up here. I think that overall the euro will go higher. That's been our thought. The dollar would go and pull back. The key thing is right now, are we going to go in and see, which we've already made a couple of runs up here. And the key thing for today, I said that I was talking about it with some other people on Friday, was this, are we going to get a daily close above 762? We were looking at the daily chart just a little while ago, and so unfortunately for those that may have not been on the first part of the show, they missed it, but we showed the significance of the 762 on the daily chart. We're not going to cover that again. So like I said, when you want to cover those early morning technicals, you're just going to have to be here, for that show, because that's when we cover those. And we're not going to repeat things over again. We'll go back over the charts, but certain key things I would point out on the daily, we're not going to go back over again. But anyway, as I said, well, you can see here it's a 758 on the daily. It's really 762. The year is still holding up strong. We'll take a look at it on the 30-minute. This I was pointing out over the weekend, and it's not, I wouldn't call this necessarily a true head and shoulders. This head's not very high. But one of the things that I was looking at, whether the market was going to break low or not, it did help is if you see here on this right shoulder, this is right where the market was having some trouble. Now, this is also the same area as this little supply zone. So it may or may not have made any real impact, and we can take a look at that here, what I'm referring to. You already had a pretty good supply zone there. You see that? But if you look here, this right shoulder top is coming in right there at 72. And you can see where the market struggled. Now, like I said, this is not very high. This head, okay. So, but like I said, and I was pointing out to some people this morning in the European session, is that you want to go in and always, whether you're a bull or bear, you want to be aware of the different scenarios. You want to know what's what you like to do is, put yourself in the other trader's shoes. If you were bearish and the market, we talked about it Friday, and that helped. I said, hey, look, anybody that was bearish, they got bearish on Thursday, got ahead of the game, and they, we saw the euro move up, on Friday, early Friday. As we started breaking lower, I said, hey, look, those people aren't going to try and, make any real money. They just want to, get the heck out of Dodge before the weekend. So we said that, moves towards that 724 were going to be supported, really 724 to 730. And I think the outright low was 726. So you want to put yourself in the other person's shoes to see what it feels like. So those people were happy to get out with a 10 pip loss, or maybe even we're lucky enough to go and break even, and that's where we found the support. So you want to look at what's happening or moving the market at that time. And so even though this market is not broken broken much, you can see here where the market was already telling you, and it's not like as if this is a 5-minute chart, it's a 30-minute chart. And you already seen a nice tweezer top right in here. Talk about that. You see here, nice little tweezer top. And in a quiet market, you can see the market starting to break down. But this happens to coincide right in here with this right shoulder. This isn't a very good high head, but once again, it's just something to look at. And like I said, when I came from the weekend, I'm thinking, okay, well, let's see what they do. Are they going to try and break lower? They push them a little bit higher. That's fine, because that's where the market is going to err to the upside, I believe. But once we got there and the market's run out of gas, this opened the door and at least kept you from, potentially kept you from just staying long or buying it, and say, hey, you know what? Maybe they have to do a little bit of work and let them, come down here. We'll get back into the 2-hour chart. On a slow day, we do that on Fridays. We spend a little bit more from a tutorial standpoint, and not that I know so much at all whatsoever. I'm saying that I try and focus on, we got the euro now 51, 751. I try and focus on technically those things that are going to, that I'm looking at their impact in the market at that time. Obviously, like I said, we're not seeing a whole lot of movement. The markets are relatively quiet. So we try and spend a little bit more time at looking at those things that may or may not be moving the market. You can take what you can out of it or totally ignore it, whatever you decide. Everybody has their own way to trade. But you can see here how the euro is struggling to get past there. And like I said, the key level I mentioned was at 762 on the daily close. So where are we as far as our resistance and support? Well, I think for right now, and the key thing is this 762. We're not able to get past it, so we're going to move this down here to we're going to keep this for 792. Although right now the key is actually 762 on a daily close. But if we were to get a push right now, I'd probably get a little bit of resistance for today, 792. The market will probably just pause there. But the key is if we got that close above 762, that would open up the door for us to make that next leg higher, which I think will come. And we're at 750 right now on the euro. It's just a matter of will it happen will it happen today, or will we see a pullback? When you look at it right now, it looks like we're more apt to see a pullback. We'll get back to the 30-minute, and I'll show you what I'm referring to, or at least the way that I see it. Could be wrong as I'll get out, but this is the way I would look at it. So we made that run up, and then you got some people that got short too soon, and we had this run up here. And we came back on Friday. We talked about that 724, blah, 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 whatever. Would be a good area to cover, which is what they did. So, technically speaking, this market is going to err to the upside, which is just what we did. But we've seen here that the key was at 762 on a daily close. So we've already made multiple runs up here, and we're just not getting it. So what you did was you got a lot of people that got, maybe not have gotten, well, some people may have gotten stopped out in here, and some people covered for minor losses or break evens here. So we make another run up here, and really you got, coming out of the G20, you have all the inklings where the euro could make a stand and move higher immediately. Doesn't mean that we won't as we get past the U.S. session, but it's going to be a quiet news day, and even tomorrow is relatively quiet. So you're looking, even though technically I think we're going to go higher, overall, you don't have a setup or a catalyst at this point to move us higher. So it's a matter of, can we move them higher? At this point, it certainly looks questionable. So maybe we're going to have to come down here and do some homework before we eventually make that run up there above, the old highs. So that's my thought process on that. Once again, no one can say for sure. We're all trading probabilities. That's it. But that's the way I'm looking at it right now. And then like I mentioned, I point out a couple of situations technically that suggest maybe we'll have to do just that. And without trying to make a stand, I look and try, like people say, let the market go and tell me something. Am I seeing some strength? And I'm just not really seeing it this time. So for support, we're going to stick with the 705 for right now. We're going to stick with the 705 for support here on the euro. So we'll move right into the cable. Now we had 24.19 as resistance, and if you look in here, we talked about it earlier in the session, and it's already time to go on the break, but we spent a lot of extra time in technicals, and I think that's good because the market's fairly slow today. But we got into this area here and this supply zone. You can see here where I've got it with the zone in color. And this is the way I trade. Like I said, everybody has their own way. Maybe you trade patterns, maybe you trade harmonics, whatever. I just trade the levels, and I just try and get confluences with fibs. Some people like to give me a hard time thinking, oh, well, God, you just got one level from one level. Eventually you're going to be right. Well, you can look at how you want to look at it, and I'll look how I want to look at it. To me, it's not like about that. It's like when they take out one level, how far does it open it up on a technical close for them to go higher? And where can the market start to see some, in this case, supply here? So when a market, you get past here, and we're going to push them higher, and they can't, then that opens the door for some stops to be taken out. But we've got a nice little supply zone. And like I said, I'm not trying to measure being right or wrong. I'm just trying to make what I can. And where do I see supply and demand based on the levels? And potentially to increase my probabilities by using fibs. So you can see here the market's quieted down. We got into this supply zone, and we quickly saw it back down. The market tried to come back up. We're probably just going to have to do some backing and filling, essentially. So when we look at support, here's the old bias pivot 2362. We probably test below that and probably see some good demand coming in here. They got the stops up here, possibly do a little bit more work. So all things being equal, we'll say support will come in at 2330. And resistance is going to be here 2447. We're going to get a little bit extra because we're going to, not thinking for today, but if we can get things turned around, where would they come into some trouble, and which isn't much above today's highs actually. We'll give it actually to here, 24.57. And we're going to change this now from bearish to a range. We've already come up to the top of the hour, so we will go on and take our break now. We're actually running a little bit late. We spent a lot of time on technicals today. So we'll take our break now and join you all back in a little bit. And thanks for joining us here on The Morning Edge.